Let's turn our attention to the markets to get a better sense of how this latest stimulus is likely to affect things on that front. We want to bring in Eddie Ghabour. He is a key advisors group and also author of Common Sensible. Eddie, it's good to have you on today. I want to get your reaction to what Josh just mentioned, saying essentially that, look, if Congress can't agree on an extension here that is at least $600, there will be a very noticeable material hit to the economy. How are you viewing the stimulus debate that's playing out right now?
So I don't think the $600 a week is going to pass. I just don't. And that's why right now we feel like we're going to see some downward pressure over the next week and 2 weeks here in the market, because if you look back to the last stimulus bill, there was a sense of urgency to just go ahead and pass something really quickly. Now that the market has somewhat stabilized, that sense of urgency is not there. And I think you're going to have this political debate that's going to go on. So I don't think we're going to see anything passed this week. And with each week that goes by, to your prior guest point, that's a tremendous amount of money that's not going to be circulating into the system and to the economy. And I think if we stretch into August trying to negotiate this, the market hates uncertainty. And as we see uncertainty on this front, you're going to see some downside pressure. At the end of the day, I would buy that dip because I think ultimately something is going to pass, which will be good for the markets. But I expect downward pressure here in the next 2 weeks.
One of the things that's likely to offer a little more clarity, even if it's sort of backwards looking, is the GDP print we're getting out on Thursday. We've seen those estimates anywhere from 32 to 36% decline, some pushing higher than that. How much of that you think is actually priced in right now?
So here's the one thing with the market is, because here's the big problem, is there's a disconnect with the stock market and what's actually happening on Main Street right now. The economic data is not good. We know that. We know that we're starting to come out of this thing, but we're nowhere near where we need to be. The reason why the market is trading where it is because of the Fed and this helicopter money that's going out to businesses and to families. So this stimulus that continues to be pushed and is passing, and it needs to be here in the near term, is the reason why the market's where it was. If we did not have the Fed doing what it was doing, we wouldn't be anywhere near these valuations right now in the stock market.
I mean, having said that, we're not expecting any significant announcement coming out of the Fed meeting this week. What are you going to be watching to on that front? Because to your point, there are concerns, I think, increasingly that the market is looking directly to the Fed, that essentially they know the help is coming in from that direction. So we're going to continue to see things push higher. What are you expecting to hear from Jay Powell? What do you want to hear from him?
So what the market wants to hear is that the Fed is going to be here to rescue any company that has any problems or be here to save the day. The thing I'm going to be looking at closely is if Mr. Powell makes any reference to certain stock valuations. In the past, he's been asked of concerns of bubbles being formed. And so I think he's going to get that question. And it'd be interesting to see what he says in regards to that. The other thing that I'm interested to see is if there's any inflationary concerns that they see, because I think inflation is going to be a problem that we could potentially have down the road. If the Fed has any comments that are negative in those two areas, again, I think is another reason why you could potentially see a pullback here this week. This is a very big week for the stock market.
So let's talk about this week then, Eddie. We've talked so much about the money that has been poured into the tech sector, and this is shaping up to be a huge week for that. On the earnings front, we've got the big names all reporting on the same day on Thursday, but we've also got the CEO testimony coming up on Wednesday as well. How are you positioning yourself in tech right now? I mean, it sounds like you're looking to rotate out, but what do you think investors should be looking for?
So I think in the near term, again, if I was a day trader, which I'm not for our clients, I would expect a pullback here in regards to after earnings on Thursday, because I think these tech stocks are priced to perfection. We know that they're going to have a pretty good earnings report because of the demand in this stay-at-home economy for those sectors. However, I think what the street wants to know is what their guidance is moving forward. I think that is more important than their actual earnings report. So I think the chances of all four of them blowing it out of the water, as well as showing strong guidance, is probably very slim. So I expect that downward pressure. But as an investor, if we see that dip that I'm expecting, in my opinion, I would buy that, because I think investors need to still have a barbell approach to have that tech, which now I've been saying is your new defensive stocks, and still start adding cyclicals. I think you're seeing a rotation that's going to happen It's been happening here the last month, and it will continue, but it's going to be a very choppy road. It really is. There's going to be times that it looks like things are going well, and then there's going to be some tough times. I'm worried about next year. The amount of small businesses that are going to go out of business are going to make people's heads spin. And that's the unfortunate reality with the collateral damage that's been done economically, especially in the restaurant and hospitality space.
I mean, you started talking about tech by saying, if I were a day trader, but the argument has always been that with tech, at least in the long term, that growth still remains intact. Have you seen a shift from that? Have you seen anything that suggests that's no longer there? And if that's not the case, what is the case to rotate out?
So that is not, I don't take 1 month of shift into value from growth and think that that's going to continue. I think growth is going to continue to be a leader. I really do. I'm just saying short term, I don't expect these earnings to really exceed expectations. So I expect a short term pullback that will allow investors to buy into those space. Now, cyclicals that have been beaten up, I think have the most upside. But I think because we're going to be so choppy that you're going to want to have that barbell approach and have those large tech stocks that, again, I think are more defensive plays in today's economy. You're going to want to have those, in my opinion, as part of your portfolio.
Okay, Eddie Ghabour, good to talk to you, joining us
Thank
from
you.
Key Advisors Group today.